with Traders, episode 101.
This is your key to the minds of trading's elite performers, those who profit in relentless markets. Here on the Chat with Traders podcast, you'll hear about the skill sets and tactics that lead winning traders to win, so you can level up and become a better trader. Here's your host, Aaron Fifield.
What's happening, traders? Aaron Fifield here. You are listening to episode 101. Thanks a mil for tuning in. My guest this week is Siam Kidd from Norwich in the UK. He's a former Air Force pilot turned retail trader, but he's also much more. He's a serial entrepreneur, and he's also on a quest to improve the schooling system, which I can respect. I really enjoyed the conversation I had with Siam, as you can probably tell by the length of this episode. We got to chat about his shaky beginnings as a trader and his rock bottom moments, how he trades currency pairs with a technical driven approach with the goal of catching major trends when they occur. During the later half, I asked Siam about why he got into business, how he's found the ability to think big, which is something I think many people actually lack, and how he's gotten to a point where he now owns 15 businesses. Then we also talk about flaws in the schooling system, Siam's grand scheme, and what the future has in store for us. Now, there's a lot packed into this episode, but before we get into it, I have a very small favor that I'd like to ask from you, okay? I'm running a survey again, guys. So if you can spare just 2 minutes, please go to podsurvey.com/traders. Your answers will help Chat with Traders to win sponsors that are a great fit. And as you know, sponsors allow us to keep the lights on and continue producing free podcasts each and every week. It's a very short survey. It's totally anonymous. And even if you did the survey I ran earlier in the year, I'd be really grateful if you can participate once again. And in doing so, you'll have the chance to win a $100 Amazon gift card. So that link once more is podsurvey.com/traders. That's PODSURVEY. podsurvey.com/traders. Thanks so much, team. I appreciate the support. Now, please enjoy this episode. Here is my guest, Siam Kidd.
So I'm sat in the Tesla right now, and Chat with Traders is in Spotify, and like you get so Spotify is like woven within the Tesla sort of main screen, and I saw Chat with Traders come up because I've liked it on my Spotify account, and I was like, wow, you're on
That's so cool.
You're in my car.
Yeah, it's very cool that some cars are coming out with apps built into them now. Like I know there's a few cars here in Australia that have like a Stitcher app and obviously Spotify and podcast iTunes and that sort of thing.
It's cool.
So yeah, I think this medium's only going to get bigger, which is pretty exciting.
Definitely. Are there many Teslas in Australia at the moment, or?
I've seen like one in Brisbane. I've seen one, and I don't know how they got it. I think I might be wrong on this. There may be a Tesla dealership down in Melbourne. But yeah, I think that they are on their way to Australia. I know there was something a little while ago where a whole bunch of people were sort of putting down a deposit on them, but they haven't like shipped, like pre-ordering. But yeah, they haven't really arrived yet, but will be interesting to see when they do.
Yeah, they're going to take over the world over the next 5 years. I really think.
Why did you decide to get a Tesla?
I love tech. It was actually it's sort of a half-hearted thing. I love Elon Musk. I really do. I genuinely I really want to do a green energy type project as an equal partner with him at some point over the next sort of 10 years or so. But like the speed, honestly, I just test drive one if you ever get the chance, as in the top line. And like I've driven all sorts of racing cars and Ferraris and whatnot, but I've never in my life experienced acceleration like this. It's relentless. So this one is 0 to 60 in 2.8 seconds, and it's just nuts. I just can't. the novelty hasn't worn off yet. So
That is very quick. Especially when you compare that to that's the speeds of Ferraris and Lamborghinis, isn't it?
Yeah, it's nuts, and it looks really modest. It looks like it's a family car at the end of the day. So
yeah. Do you like the idea of the car being electric though? I don't know how I feel about that, and it's strange because I'm not like a hard out petrol head or anything like that. But it seems kind of a little bit bizarre.
Yeah, it is weird. I mean, I love the sound of a nice V8 or whatever, but it is freaky. I mean, it's really convenient because there's Tesla chargers all over the UK, so that's free, and it takes half an hour to charge up. And I charge up at home, so every time I leave home, I've got 250 miles of juice. So it is convenient.
It's interesting to hear. I've never actually spoken with someone who owns one before, so very cool to hear. Okay, so I know you're sitting in your car there all propped up. Are you on any time constraints?
No time constraint. No.
Okay, cool. Well, I hope you're comfortable because there's a lot I want to ask you about. So when we were speaking the other day, you told me that when you were 25, I think you are around about 30 years old now.
Yeah.
You said when you were 25, you were stone broke. So let's just start right there. What was your situation?
Okay. So sort of rewind a tiny bit. So I think the year before, we in the Air Force, the station commander got all of the pilots in a room, and once a year they always had this sort of big pep talk. And he was talking, and he basically said, if you guys work hard, one day you'll be in my boots and you'll be, talking to your pilots, etc. And I sort of wondered, what is a station commander actually earning? And I quickly asked around, and within, people sat next to me, and they're only earning about sort of 80 to 90,000 pounds per year. And I was like, wow, I have to work another 20 years to earn just that. And I wanted more like something like 50 grand a month, etc. And it was that point I reread Rich Dad, Poor Dad again properly and realized, I've got to do something. I've got to get out. And that was literally around the same time as my trading started to get more consistent. I mean, by then I'd done 7 years of trading. And it was, like every new self-taught trader. I mean, the first 4 years, I was every horror story you've ever heard, that was me. And I thought I was getting a bit confident because I'd have, these streaks where 3 or 4 months in a row, I'd be on fire. And obviously, my trading psychology wasn't fully formed because I would feel like I was, Gordon Gekko. And so, yeah. And that, I call it Billy Big Ball syndrome. And yeah, it really flattered me because I left the Air Force. I was like, right, I'm going to leave the Air Force. I'm going to trade full time. And so fast forward to being stone broke. I left the Air Force with no safety net whatsoever. I only had 10 grand to my name, which all went into my trading account. And I then made the worst trading mistake I think I've ever done. Basically, I didn't have a job. I just left the Air Force and I was like, right, I'm just going to trade full time. And I was going to pay my rent, my utilities, live my whole life, through my trading returns because I was, coming off the back end of one of these Billy Big Ball moments. And I mean, for the next sort of 2, maybe 3 months, everything was great. I was turning that 10 grand account into sort of 2.5, 3 grand a month. And I'm cringing now just retelling the story because it's just dreadful risk management. I was making 30% per month. And then lo and behold, either month 3 or month 4, I think I lost 50%, and it was just ridiculous. And it was to the point where, I say I was flat broke. You're never going to starve to death in the UK, but I was setting up payment plans with energy providers because I couldn't pay the bills. We're shopping in Lidl, which is in the UK, that's our sort of cheapest store. And the people around me know the cheese and mayo story, or basically Ellie, my fiance at the time, came up with cheese in one hand and mayonnaise in the other and sort of shrugged. And basically we were struggling to decide whether to buy cheese or mayo because we couldn't afford both of them. And yeah, so we just had to buy more pasta and rice because that's dirt cheap and it grows. So yeah, that was sort of rock bottom. Yeah.
Full on. So what led to you getting into trading in the first place? Like, we're sort of talking around the time when you're about 25 years old at this point, but obviously you started trading a lot earlier, or like at a younger age. When did you start trading, and what like led you into it?
So I was 18, and again, I feel quite embarrassed telling this story because I just joined the Air Force and I was going through officers training, and at the same time I've always liked stuff, so I like cars and gadgets and stuff, and the Air Force wage really is quite poor, and I was thinking, right, how can I make money in my underwear in bed on my laptop? And two options came up, and one was online gambling and the other one was trading. And I thought, well, trading is going to take too much time because that's, the pros are screwing up. What am I going to do? And so I got into online gambling, and being the idiot that I was, I looked at online roulette and I thought, right, I've got it. I've hacked the system. And I now know, I think it's called the martingale system. Basically, I was doubling up every time I lost.
It's a recipe for disaster.
Yeah, exactly. I thought, what are the odds of me losing, 10, 15, 20 times in a row? And I quickly made about $3,000 profit in like an evening. And I remember so this was in the mess, and I went to like at dinner with all my other sort of Air Force mates. I was like, guys, I've got it. I just made $3,000 doing online roulette. And I've hacked it, and basically they're all asking how. And I was like, well, I start with 50p, and every time I lose, I double up. And by then, I think the most losses in a row was like 7 or 8. And I mean, yeah, I'm cringing now because like the numbers and the stats behind it is just silly. And what I didn't know was that there was a maximum cap to how many times you could do that. So all my friends went into my room after dinner, and there was about 8 people watching me, and I turned that $3,000 into $4,500. And then I think like 15 reds came up in a row, and I lost everything.
In front of everyone?
In front of everyone. I was literally squeezing the mouse, and everyone sort of left very quietly as I was silently raging. And I made my first big financial error. So I was 18 and everyone left, and I did the typical trying to revenge gambling. And I was like, right, I'm going to get it all back. And I maxed out a Virgin credit card. So about 3 hours later, I lost $4,500 by maxing out my credit card.
Oh no.
And yeah, so I haven't gambled since. Literally that night was like my big dose of reality, and I haven't done since. And then, so I then moved on to trading, where I did considerably worse for the first 4 years. So
that's funny. So how did you go? Maybe walk us through your first year of trading. What was that like?
A disaster. I'm sounding like I'm a bit of an idiot. Well, I was, but I'm not now. But it was Alta Vista back then. I don't think Google was around, and I did a bit of Alta Vistaing. And after about a few hours of Google or research, I thought, right, I got this. And so I opened up some sort of I didn't bother with the dummy account because I didn't even know that they existed. So I opened up a $2,000 account, and I lost it within that first day. And that was my first experience of a margin call, and that wasn't very nice. And the thing is, with the Air Force, I managed to live off just 10% of my income. So literally 10% of the income paid for everything, because the Air Force sort of looks after you and they feed you and clothe you and whatnot. And the remaining 90%, I was literally just blowing on the markets. And every single month for the first year, I was blowing $2,000 a month on the markets. And so I think I lost about 50k in my first year. And I think through stubbornness, I just carried on doing that for the next 4 years. And I think all of my mates thought I had a bit of a gambling problem, which I think in hindsight, I think I pretty much did. I was just obsessed with the 1 minute chart.
Yeah, that does sound like a bit of an issue, especially if you're losing $50,000 a year pretty consistently.
exactly. It's pretty much all of my wages every year. And I mean, have you found that yourself? Like, from seeing like new traders, people do always slip down into the lower time frames. And I feel for beginners, that's really quite dangerous.
Yeah. We'll definitely get into that a bit more. I'm interested to hear, what did your fiance or your girlfriend at the time, I forget which it was, but what did she make of this? Obviously you weren't in a great financial situation, and most of your wage was supporting your trading habit.
Yeah, so I think she was hoping that this trading thing would be a bit of a fad. And she, like, obviously she said, why are you leaving the Air Force? Because it was everything I, dreamt up, aspired to achieve. And, but, she was supportive when I did leave. And yeah, it's hard. She didn't approve, especially when I'd turned a 10 grand account into 5, and then later on a 3 grand account. So that wasn't too good. But I don't know. I suppose she just trusted me that I'd sort of dig myself out of my own sort of shithole, so to speak.
You'd work it out.
Yeah. And in the end, I just had to, it was quite sobering because I had to just go and get any old job. And it was a massive reality check for me, because I went from having a really nice paid job to having a 16 grand a year admin role at some recruitment company. And it was just like, it was quite demoralizing, basically. And because of the lower income, I couldn't, my trading pretty much stopped.
So why did you decide to go into this admin role instead of going back into the Air Force? Did you just want a job that was just giving you enough money to get by that you didn't really have to care about too much? Like, what was the idea?
Well, one, I couldn't rejoin the Air Force like that. Like, once you quit, the door is closed. And I literally, because I screwed everything up, I just needed some income because I couldn't pay any bills. So I literally went to, not the job center, but I think it was one of the online job boards, and I just applied, the standard, applied for 20 odd jobs, had 10 interviews, and all of them turned me down apart from this admin job. But yeah, so I was still trading. However, I was trading a 2 grand account, which is literally peanuts.
Very difficult.
And I was I had to go back to the drawing boards, basically.
Okay. So how long did it take you to become profitable?
I think it was really soon after that. I think after really screwing up, I went back to the drawing boards. And I think only 6 months after that huge screw up, I just started being sensible. I was being extremely picky. I finally got my head overnight. There was one morning I woke up and risk management finally clicked in my head, so to speak. So I think from year 7 onwards, I traded way less. I was going back to the daily charts only. I was placing probably one trade a fortnight, and I was just being really selective and making sure that the Triple R was there. And I'd always paid lip service to Triple R, but I made sure my Triple R was 1 to 3 minimum, and preferably at least 1 to 8. So yeah, I was on a massive self-development sort of drive. I was reading I was going through about 3 or 4 books a month through audio books and stuff. And I'd read, Market Wizards and all of the standard books, so to speak. And Van Tharp was a huge, huge help.
So, with the power of hindsight, looking back, you said it took you about 6 to 7 years to become profitable consistently.
Yeah.
How would you have shortened that amount of time?
I would, if I had someone who knew what they're doing, that would have been rather handy, someone to actually ask questions to. But all I was doing was just Googling and trying to basically trial and error and developing my own sort of BS detector, basically. And I fell into every pitfall you could ever make, from strategy hopping to buying black box type things to day trading to, well, scalping. And scalping is alluring because sometimes you can make, a hell of a lot very quickly, and then the next day, obviously the underlying thing here is that I had very poor risk management. I mean, there's no good or bad forms of trading, as long as you have good risk management. However, my caveat to that is that if you're a new trader and you're like in your first year or two, I would highly recommend staying away from day trading.
I know you feel very strongly about this. Let's just get into it right now. Why do you say that? Why do you try to encourage new traders away from day trading?
Well, I've got this sort of mantra that boring trading is good trading. And my trading has always been really good when I'm bored out of my mind. And the thing is, with day trading, maybe it's because I've just been burned massively through just sheer stupidness, but when you're looking at the 1 hour charts and below, or let's say the 5-minute charts, because that's quite popular, you're sat there staring at your screens, and every 5 minutes you have that new candlestick, and you're constantly second guessing yourself. You're looking at the markets, you're staring at the P&L, and it sort of forces you to sort of make decisions, quicker than you really need to. And what a lot of people do, because like if you're looking, like everyone has done Investopedia or whatever, or gone on to Baby Pips and taught themselves the basics of trading, and everyone's aware of support and resistance and stuff like that. And the thing is, when you're looking at support and resistance on a 5-minute chart, like the ranges or all these levels, they're all very small. So you may look at something and go, oh cool, yeah, I'm gonna go long here and have like I put my stop loss below this level of support. And your stop may be, 10, 20, 50 pips. But when you look at the bigger picture, you'll see that where your stop loss is right in the middle of all of the chop. So I suppose the learning point there is that even if you are trading the lower time frames, you need a multi-time frame analysis. You need to always look at the big picture. I mean, don't get me wrong, I do day trade when I want a new toy or whatnot. But again, even when I'm doing that, I'm still not placing that many trades, and I'm super, super selective. So only taking trades, going with the trend and etc. And also, like, you have to understand that a lot of I don't know what the stats are globally, but I know in the UK there's only 0.1% of the nation that actually trade. So at any point in time, there's about 100,000 traders in the UK trading, and I would hazard to guess at least 95% of them are losing hand over fist, because most of these traders are retail traders that have done a course or they're teaching themselves, and the people that are winning are the institutional investors, the prop traders, the banks, etc. And like all of the smart money, they know how retail traders think. They know that people are putting stop losses below support or above resistance, or they're looking for head and shoulders and putting entry orders below the neckline or whatnot. And so when you're looking at price action, you can really tell what the banks are doing. So are you familiar with stop runs?
Yeah, but just explain it for any of the listeners if they're not.
Okay, so a stop run is basically where, let's say you have a level of support and lots of people are going long, and no doubt there's lots of stop losses below that level of support. So what happens, if you go back to the basics, when someone goes long, there needs to be, in order to be filled, there needs to be like an equal sized trade going short. And so if you're like a big institutional, like let's say you're a big bank and you've got hundreds of millions, if not billions of pounds or dollars to play with, if you want to have a big position to go long, you can't just go long willy-nilly. You need to find sellers. And one of the easiest ways to, get sellers is effectively stopping people out, because when a stop loss is activated, that acts as or that sell side for you there, and so they can get filled. And if you look at a lot of sort of key reversals and whatnot, you'll always see some sort of spike into into that level of support or resistance in order, to stop everyone out or to activate other entry orders, so to speak. Yeah, I mean, like the moment, a lot of people listening to this can probably relate to this. Like when I was like inexperienced, it felt like the whole world was watching me every time I placed a trade. And the moment I went long, it's like everyone, oh, he's gone long, let's all go short. And like there are times where I just place a trade and the market just bugger off in the wrong direction, like instantly. Okay,
and you mentioned a little earlier that another challenge you had when you were coming up was strategy hopping, and I think this is something that a lot of traders coming up also struggle with. You're definitely not the only one who struggled with that. What exactly is strategy hopping? Like, how can you kind of identify when you are doing it, and why is it such an issue?
Okay, so I suppose there's two ways when you can approach this. So if you're a typical punter, and I know you've gone on some forum and you found some sort of guru saying, oh, you need to do this system or this, moving average crossover type system, and then you go along, you trade it, whether it's on a live or dummy account, and let's say it works for a bit, and you'll go, oh wow, I've found a really cool system here. So you then do this system, and then after a while you start losing, and because you don't really know much or have much trading psychology or risk management at all, you think, oh well, this was a waste of time. It must have been fluke. And so what you then do is you go back to the forums and the or books and whatnot, and you try and scour the internet for other systems, and that's an endless rat race type cycle, which I found myself in for a good number of years. And anyone that's listening to this, if you're in that sort of cycle, please be aware of it. Now, so that's the bad way to go about it. Now, obviously, if you're starting out and you don't have a system, well, obviously you need to find a system. You need to find that sliver of an edge on the market. So if you're aware of obviously you need to test things. You can do some Monte Carlo testing and whatnot. There's only so much back testing can do, because there's a certain amount of curve fitting that you can do when you're trying to test out a new strategy using past data. But yeah, please, by all means, test out new strategies, but be aware that not every strategy is going to work all of the time. And this is why I've I think, slowly migrated to swing trading and, technical trend trading, basically. This is just a matter of opinion, but I personally believe that trend trading works simply because it doesn't work all of the time. As I was saying, I think the other day to you, that when you look at the markets only trend 15% of the time. All the other times they're either ranging or chopping or, just being horrible looking, so to speak. But when they do start to trend, they then have a high propensity to carry on trending, and trends do trend a lot longer than people think. And so if you can get on these these trends, there's a lot of potential profits to be made. And like the way I look at things is that if you look at any, so I'm predominantly a currency trader, so majors and minors, and when you look at any sort of individual currency pair, more often than not, each pair will trend at least 1,000 pips, probably once, maybe twice a year. Some more than others, because I like pound Aussie will have far bigger trends than say euro dollar, but it's the way that they're sort of geared. But and I now look at basically 20 different pairs that I have on my sort of radar. And it's just a numbers game for me. So I know that roughly 20 different pairs will trend in at least 1,000 pips, at least twice a year. So that's 40 different opportunities to try and jump onto. And really, I only need one, maybe 2,000 pip plus winners for me to have a good year. So I'm just playing a numbers game. And you've looked at my track record, or my reports, and you'll see that I'm flat most of the time, if not negative, because all I'm doing is I'm trying to get in these runners, and I get stopped out a lot, or so I may have 3 or 4 like losing or flat months, and then I have a big win. So I just make sure I have only 3 outcomes: small wins, small losses, and huge wins.
Yeah. No, I did see that, and I thought that was interesting. I've actually got a couple questions that I want to ask you around that. But before we do, you're talking about these big trends that happen in some currency pairs. How do you define a trend?
Okay, well, I mean, if you're trying to jump on a trend after it's formed, you're far too late, because normally the market's already moved like 200, 300, 400 odd pips. So you need to try and get in at the beginning. So what I tend to do, I mean, I try and, so I'm a swing trader. I try and sort of get on the reversal. So this is a lot why I get stopped out quite a lot, because sometimes I effectively jump in front of that steam train, so to speak. But I do also manage to get in near the bottom or near the top of some reversals. So one of the key things I do when doing sort of support and resistance trading is that, like, if you're looking at any odd market, a currency pair or an index or whatnot, and you see a huge level of support. Let's say the market is coming down nicely, and you've seen, let's take the FTSE. Let's say it's it's bounced, it's hit the 6,500 level, and it's bounced off. So all of a sudden you're thinking, okay, that's a key psychological level of support. It's a 00 number, and it's bounced off. And let's say it rallies a bit, and then it comes back, and over time it starts migrating down a bit, and it's now approaching the 6,500 level again. Now, in terms of support and resistance, what I've found is that level of support is its most strongest that second time round. So first of all, it's hit that level once, and the second time it hits that 6,500 level, I believe, is the strongest part. So what I would then do is put an entry buy order at literally on the 6,500 level, in anticipation that it hits that level again and then sort of bounces off, back north. And obviously, I then have, support, stop losses and whatnot, below the 6,500 level, but I will also scale in. So I may put an entry buy order on the 6,500. I'll probably put another entry buy order on the 6,450, and also I'd scale up as well. So if it does overshoot and punch through the 6,500, which it will do, but then retraces, and let's say the market it can't close below it, so to speak. That's how I can get on the reversal. So I'm in the trade, and if it then starts going up, and 200-300 odd pips later, it's starting to form a bit of a trend. Well, you're in near the beginning, and I mean, obviously there's the standard definitions of trending, higher highs and higher lows, so to speak. But really, I just like to see the market break out from distinct levels of ranges. Really. Okay.
So a lot of the way you're trading is really in anticipation of a trend playing out, essentially. Yeah.
Yeah. And also you get the best triple R when you're doing that, because if, let's say, the market bounces off 6,500 and I know it's now shooting above the range and it's starting to break out, the market's probably already gone up, 200, 300, 400 odd pips. And if you then try and go long, on the breakout up, north of that, range, then, I mean, yes, you can still make profit, but ideally, I mean, where are you going to put your stop loss? I mean, ideally, you always want to put your stop loss far out of harm's reach. So, you'd like to put it below the actual range. So you end up having like a really big stop. Whereas if you're trying to anticipate the bottom of the range or the bottom of a potential reversal, you can afford to have a far smaller stop loss. So you could have like, 150 to 250 pip stop, and then end up, bagging 1,000 pip or whatnot, and making, anywhere upwards of 1 to 5, triple R.
Yeah. So I guess the other side of that is you also get stopped out quite a lot. Your stops get hit very quickly, which then leads you to have quite a low win rate.
Correct. It's 32%. for me.
Okay. And, you know, a lot of people aren't comfortable with this, or they find that difficult to actually stomach. And I guess that's maybe one of the reasons which kind of leads to strategy hopping, which we spoke about a little bit earlier. But how did you get comfortable with having a win rate around 30%?
Well, don't forget, by that time, I'd had years of unsuccessful day trading and scalping. And like one of the things that allures people, you know, to these sort of day trading, or, you know, any sort of beginner or black hat strategy is that, you know, do this system and you're 95% accurate, etc. And I was well aware that, yeah, you could make up a system right now which is 99% accurate, and you'd have all these win. But when you had that loss, it would wipe out like a month or more worth of profit. And so I was well aware of, you know, triple R and expectancy and whatnot. So, and I, so yeah, going back to the question, what made me feel more comfortable is that, well, one, I'd just given up on, you know, staring at the charts, you know, 5 hours a day, etc. And I wanted something which is, I could just run and get on with my life. So I sort of came up, as I said earlier, I just sort of got into the mentality that all I need is 1,000 or 2,000 pip trades, and that'll make me, you know, 10, 20, 30% per year. And I was just trying to play the numbers game. And even though because I'm trying to get on, you know, I am literally stepping in front of the train a lot of the time, I only dip my toes in. So those first few, you know, couple of entry orders that I'm, you know, trying to jump onto the trend, I'm only going in at 0.25% max risk, instead of, you know, a lot of people go, oh, you know, 1% is, you know, max risk. Well, I mean, if I kept going in at 1% max risk, I mean, yeah, I'd be destroying my account left, right, and center. But so all of these initial trades are 0.25% max risk, and then if I'm stopped out, well, great, well, I don't lose much. And I know that, you know, that trade idea is a dud. But when the trade starts to go in favor, I then scale in. So my second entry order, once it's going up, so probably 100 pips, once I'm about 100 pips in profit, that will be about 0.75% max risk. And then all subsequent sort of scale-ins would be anywhere between 0.25 and 0.5 or 0.5% max risk. And and I'm mitigating risk as we go along. So I'm like, for example, on the Black Monday debacle, I mean, there was, I think on the GER30, so on the DAX, I had about, whilst it was spiking down, I probably ended up having about 25 trades all on the DAX. And as it spiked down, it was just activating like all of my entry orders. I call them fishing nets, if that makes sense.
Yeah. So, you know, that's interesting. How did you go about, or were you involved in trading what's just happened this week with the elections?
I haven't done too well, to be honest. So like on my Facebook 6 months ago, I said Trump's going to win, and I'm expecting the markets to tumble. And so a few weeks ago, I sent out to, some of the people that follow me, I'm setting up some positional trades, and I'm putting my shorts in now, because we've been hitting all-time highs recently on, all of these, on the indices and whatnot. And I thought, right, I'm going to, get a positional trade in. And I literally, I wasn't watching the markets because it was like 4 a.m. in the UK here whilst this was going on. And I was, and I had a fair few trades open. I mean, not much. I mean, I'm down. In fact, yeah, I'm down 5% because of Trump, because even though I got the direction right, I mean, the S&P did spike down and I was massively in profit, or I had a massive floating profit. What I didn't expect was it to rebound and then rally like an absolute mother.
A lot of what we've been talking about here has been, actually, just before I get on to this next point I wanted to ask, you're talking about how you like to catch the really big moves. Okay, so you're taking a lot of small losses, just waiting for that big move to come along.
Mm-hmm.
Now, how do you anticipate when that big move is going to come along? Because obviously just trying to trade each reversal and that sort of thing, like the market is more likely to put in a big move at a certain point than it is off each, little reversal. So how do you, I don't really know quite how to word this question, but I think you know what I'm getting at. Like, when is the market most likely to put in a big move?
So, well, the honest answer is I don't know. No one's got a crystal ball, but what I do like looking for is coiling. So, well, basically, whenever we see a big move, what you'll find is that if you look at any big spikes like Black Monday and whatnot, volatility tends to sort of drop for some reason just before these big moves, and we see a sort of coiling in the market. So the range, the range of the candlesticks for the week or a few days beforehand gets really small, and it's like it seems like it's a big spring that's being compressed, and then eventually, it's basically market compression, and after compression is always expansion. And normally, you see these on flags or wedges or triangles and whatnot. It's all these patterns, these wedges and triangles are a form of compression, and you can see at the focal point, that the zenith of the sort of the triangle is the maximum coiling, and then you see the release of some sort, and then you see a big spike. Now, I do like some sort of flags, where you see a real distinct coil, and you see really distinct levels of support and resistance in these sort of wedges and whatnot. In which case, sometimes you don't know the level, so you can straddle it, and then obviously you have your fishing nets above and below, so to speak. But also, I like really strong defined levels of or ranging, i.e. bullish and bearish rectangles. So if I see a huge downwards trend, let's say in a market, and then all of a sudden over a month or so, the market just hovers around a level, and it's creating like a nice 200, 300 pip range over a month or so. But when you're looking at the big picture, you can see that it's a big bearish rectangle. That is when I like to get in my shorts near the top of that resistance. And what you'll normally find with bearish rectangles is that when it does finally spike down to the downside, you will always see some sort of stop run. And that's where I get my shorts in. And so the honest answer is I don't know when it's going to happen, but when I see these really defined levels of support and resistance, I know something's going to kick off. Because the way I look at support and resistance is like, imagine you're by a lake and you pick up a soft pebble and you wing it across the water. Well, that pebble is going to bounce, isn't it? And every time that pebble connects with the water, it loses some kinetic energy, and it keeps bouncing and bouncing until it's got not enough kinetic energy to bounce, and then it just plops through the water. Well, I see the markets like that, and the more times the level is attacked, the weaker that level becomes. And so as I said earlier, the strongest a level is when the first or second time the market is smashing into it, and the weakest part of a support or resistance level is when the market is smothering it. Does that make sense?
Yeah, no, it does. And just a question based off what you said there. What's the difference between a bullish and a bearish rectangle?
Yeah, sure. So if you have let's say on the daily and weekly charts, you got huge downward, momentum, and then all of a sudden the market stalls and it then starts going sideways. And then breaks to the downside. You can see it's created like a long rectangle, and that will be a bearish rectangle. And the opposite is for a bullish. So if you see a big bullet, rising market, and then the market sort of takes a breather for a few weeks or a month and creates a distinctive level of support and resistance, and then breaks to the upside, that is a bullish rectangle. And what a lot of retail traders do when this, you go on any trading website and you'll see all these patterns, head and shoulders, double tops and whatnot. A lot of people trade them and get in way too late. So with a bullish rectangle, a lot of people get in when the market's breaking on the upside of these of the bullish rectangle, where in fact the most profit and the least riskiest time to get in one of them is on the bottom, is literally on the support level of that rectangle, because that way you have the smallest stop loss and the highest R multiple, basically.
Okay, so what defines a bullish and a bearish rectangle is depending on what side it breaks out of.
It's the overall trend of the market. So, for example, let's take euro dollar. If you look in the big picture, that's falling. Let's go pound dollar. So cable has been falling massively over the last sort of 2 years, hasn't it? Well, if and there is still downside pressure. So if all of a sudden the pound dollar starts ranging, and over the next month or so, and it creates a really strong level of support and resistance, i.e. a rectangle, I mean, that would be a potential bearish rectangle. Does that make sense?
It does, yeah. Just moving on from that a little bit, a lot of this has been, it sounds as though you're a very technical trader. How important are fundamentals to you, if at all?
So in my overall investment sort of life, fundamentals are crucial. They're really important, but for my trading, negligible. Because I've just got a system. I stick to it, and it's just a numbers game for me. And I'm very technical. And the thing is, every now and again, probably once every 2, maybe 3 years, I'll be jumping on 1,000 pipper trade, and I'll be sort of 1,000 pips up, but it'll then turn into 2, 3, 4,000 pip trade. And when that happens, I mean, that single trade, I will be riding it, and I'll have, God knows how many positions on it. I may have sort of 20, 30 positions on that trend, and that one trade will make me sort of 2 or 3 years worth of profit. So that's all I'm doing. In terms of fundamentals, I use that for my overall investing. So trading is just one pillar to my financial Parthenon, so to speak. And I believe everyone needs to sort of identify that they have a financial Parthenon, whether they know it or not. And you need as many pillars as possible. So trading is one of them. Business needs to be other. You have business, properties, alternate investments, gold and silver, all sorts of different things. And so, especially for businesses and my sort of longer term investments, fundamentals are big. So I've got a lot of physical gold and silvers because of where the fundamentals are. Really, it's a safe hedge.
Got it. Okay. Yeah, I'm gonna ask you about all your business related ventures very shortly. Before we do, I'm just going back to this point about you trying to catch these really big moves, 1,000, 2,000 upwards pip moves. How do you actually manage a trade like that? I know you've talked about how you actually scale into it and that sort of thing, but nothing moves up in a straight line 2,000 pips. There's some really big retracements during that time. How do you manage those? Like, how do you know where you're going to get out if it continues and if it, starts to turn around? And how do you actually manage that position?
Yes, it's a good question. So when I'm in a trade, what I've learned is that you really need to make things mechanical, and the more thinking you do, the worse your trade will be. And so I do not like to top pick or bottom pick once I'm in the trade, because you're just going to scare yourself out. Especially when you're looking at the P&L, you'll see that you're not, 800 pips up, and you're looking at the pound, how much, the monetary amount you're up, and every bone in your body is going to want you to snatch, basically. And you're spot on. Things do not go up in a straight line. So the reason I love the daily charts is because, most people around the world are looking at the 1 minute, 5 minute, and hourly charts. But when you're looking at big trends, so 500 plus pips onwards, but long story short, I use 2 moving averages to monitor, to maintain my stop losses. So I used to be quite technical and have my stop loss in accordance with ATR and whatnot, but now I just keep it really, really simple. So simple trading is good trading for me. So I just plot an 8 and 21 EMA, and what I do is I will trail. So once I'm in a position, once I'm in profit, once I'm 100 pips up, I'll then start trailing the 8 EMA. And what I do is I make sure that I have a nice gap between the 8 EMA and my stop loss, and also a layer of protection in between that. So when I say protection, I mean like a 00 number or a 5 or a 50 number, because they are natural sort of psychological levels of support and resistance. And so as the market goes up, by the time it's sort of 250, 300 odd pips, because I'm trailing 8 EMA, I'm only breaking even by the time it's, a couple of hundred pips up. And what I then do is I keep on trailing the 8 EMA, and then when I've locked in 200 pips, so I mean this hurts. It really does hurt, because by the time I've locked in 200 pips by trailing the 8 EMA, the actual trade is probably 400, 500 pips in profit, and you're sat there going, oh, I'm only locking in half of that. And then so the 200 pips part is quite key for me, and then I then leave the stop loss there and wait until the 21 EMA catches up. And so that's even harder, because the market will carry on going in your favor. And by the time the 21 EMA is sort of caught up, like the whole trade may be 600-700 pips up, and you've only just started trading the 21 EMA. Yes, there are times where, the market, goes up 600-700 odd pips and then just pulls back or reverses. And, I've only bagged 200 odd pips or 400 odd pips or whatnot, and that can be really frustrating. But what I have found by trailing the 21 EMA, that gives you enough space from the market to trend. And just pull up a chart, get any major pair out, and look for any big trends and plot the 8 and 21 EMA, and you'll see that the market does always pulls back to the 8 and 21 EMA. And as long as your stop loss is below, the 21 or above it, if you're shorting, you'll be fine. And then eventually the market will, reverse or pull back into my stop loss, and I'll be out. I mean, there's zero thinking involved. And so I literally spend less than 5 minutes a day trading, because all I'm doing is I'm looking for my setups. If I see none on my radars, I don't do anything. And if I've got some positions, I just smidge up my stop losses by every other day or so.
Right. Now, you said your trading takes you about 5 minutes a day, and this is something I was going to ask you about, because you'd mentioned it the other day when we were speaking. That's going to sound really absurd to some people that you spend no more than 5 minutes a day trading. I don't know what question to ask first, but like, is that realistic for someone who's still finding their way as a trader?
No, definitely not, because I'm a firm believer that you need chart time. I mean, we've all heard that 10,000 hour rule, where, it takes 10,000 hours to be good at something. I think it's actually a lot more than that. I mean, you can do 10,000 hours of, something and still be pretty shit at it. So it has to be quality time. And I think I've had well over 40,000 hours of staring at charts. And so it gets to the point where you can look at a chart and, you can see all, the price action, and you get to understand price action a lot more. And so when you're starting out, you need chart time, basically. You need to understand price action, because like I have basically 2 moving averages, the 8 and 21 EMA, and pretty much that's it. I mean, I may have a sort of another indicator to help me get in, but I am and that's it. So to begin with, when you're finding your feet, you need to put in the time. You need to read the books. You need to read everything Van Tharp has kindly made, and all the other and the Market Wizards books, etc., and really get into trading mindset, because that is everything. But for me, I mean, I am of the opinion that, like, I personally, I know that I'm going to trade until the day I die, simply because it doesn't impede in my daily life. Whereas we are all busy, no matter who you are, what you do. I mean, we all, have a job or a business of some sort. And then, if you have to come home and, feed the family and walk the dog, and then have to spend like another few hours staring at charts, it's going to get in the way of your personal life. And that's why a lot of people, they may start getting into trading, but, 3-6 months down the line, they just give up because it takes too much time. Whereas if something takes 5 minutes a day, well, you're far more likely to continue doing that. And so I've just got a set routine. I wake up whenever I wake up, and I sort of stumble into my office in my dressing gown. I load you don't need multiple screens, but I've got 3 screens, and I load up my sort of radar, so to speak, and that is something I've sort of developed myself, and I just look for potential setups. So this radar is effectively like a tiny. I'm just looking for a certain sort of indicator, so to speak. And if I see a potential one, I'll then open up a proper chart and have a look at it. And I've got a rule that if I've got to think more than sort of 3 seconds about it, I don't place the trade. If I've got to think about it, it's not a trade.
Yeah, I like that. That's actually, I interviewed John Carter on the podcast. I think it was like episode 69. And he said something very similar. He said, I'm going to butcher it, so I'm not going to bother. I'm just going to link to it in the show notes. But yeah, he said something very similar to that, which makes a lot of sense. So this radar is essentially like a scanner of some sort. Like that's really what saves you a lot of time.
Yeah, massively. And I'm getting quite lazy actually, because I'm actually about to get a trading assistant. So I'm going to get another PA, and that person's going to also do my scanning for me. So the plan, I'm literally probably a week away from getting this. I'm doing the recruitment as we speak. The plan is for that person I'm going to teach that person, my methods, etc. And then every day, or in fact, look at the charts a lot more than I do, and get that person to look at my radar. And then if there is a potential setup, by the way, every time I see a potential setup, in order for me to place a trade, I'll go through about 10, maybe 20 potential setups for me to actually place a trade. And so I'll get this person to go through the radar. If there's a potential, look at the big chart, like a proper chart, and see if it's a goer. And if it is a goer, what I'll do is I'll get that person to, WhatsApp me, they're going to be in the same building. I'll just say, Siam, here's a setup. I'll then have a look. And then if I say, yeah, it's a goer, I'll say, right, place the trade for me. And that person will know, what to do next. So I'm just trying to leverage everything in my life, everything from time, money, assets, resources, everything. I'm just lazy, basically.
Well, no, I think that's a good thing in some ways. That's what you got to do to scale. There's a quote by, is it Bill Gates? Something around that, how he'll always hire the laziest person over someone else because they'll find a quicker or easier way to do it or something like that, which I think is maybe relevant to this.
Yeah, I've got a concern about what I'm going to do though. So it'll be interesting to hear the feed on this, because this is sort of an ask from my point really. So one of my concerns is if I do this and fully outsource my trading, I'm going to lose touch with the markets simply because I'm not doing any looking. And one of my rules is that, if you go abroad on holiday or you're traveling, I purposely turn the charts off. I do not trade at all, because for me, it's imagine you're in the cinema and you're watching a movie, the Avengers or whatnot, and you can sort of, you get the storyline. Normally it's not that complicated, but let's say you've got to exit the cinema for 20 minutes to take a phone call. When you get back in, you sit back down, you're going to be like, what the hell has happened? And it's going to take you, 10, 15 minutes to catch up with the storyline. And I think the markets are very, very similar. Yeah, so I think if you do go traveling and whatnot, you should trade very small position sizes, when you get back, just to get your eye back in. And I'm actually worrying slightly that by outsourcing things, I'm just going to lose track of the markets.
All right, so we've spent a lot of time talking about trading. And obviously that only takes up a small portion of your day. What's the rest of your day made up with? Talk to us about your life as a businessman.
Okay. So to begin with, the only reason I love business is because I've scoured the globe, all its asset classes, and I'm of the opinion now that the asset class of business is by far the most lucrative and best ROI or best, triple R business or asset there is by far. I mean, if any of my businesses don't grow 50% in a year, I'm pretty pissed off, to be honest. Whereas, can I make 50% per year on my trading account? No, not consistently anyway. And so over the last 5 years, I've been getting into business, but really over the last 3 years, I've been really dedicating all of my time into it. So I've got about 15 businesses now. 5 of them I've started up myself, so they're my sort of babies, so to speak. But I've been really getting into mergers and acquisitions, and like the ROI on that, like the ROI cash wise and also time ROI is just like it's unlike anything I've ever seen before. And so all I'm doing is what I say to new traders is that they need to ignore all of the hype that they see on Google, because trading categorically will not make you rich anytime soon if you don't have any capital to begin with. Whereas most people think it will, when it really won't. I mean, you can be busting out 20-30% ROI years every year, but if you're trading a 10 grand account, it's not going to get you far. So you need the capital. I mean, capital is crucial with trading, as you can imagine. So all I'm doing is I'm siphoning all of the dividends I'm getting through the businesses are all flowing upstream to my holding company, and I'm just siphoning all the profits from my businesses into my trading account, and then I'm using trading as sort of like my computer is like a cash machine. It's like a compounding interest machine. And when you look at lots of rich people around the world, you'll see most of the billionaires out there have not got rich through, gambling or trading, whatever. It's through business. It's by, setting up, running, growing, and then selling the business. And when they get that huge liquidity event, they then, by default become investors. And so no one really ever got rich through compounding interest. That's sort of this, marketing myth. They go, make 10% per year and in 40 years you'll be rich. Well, who wants to be rich in 40 years when you can't do anything? So yeah, I think you need to use compounding interest to grow your capital and, exacerbate the returns that you get, if that makes sense. So I've just realized I haven't actually answered your question. So yeah, the day in the life is, I suppose, like the day in all I'm doing every day is just, or I don't even run the businesses anymore. So I like to utilize other people's time. So I have people, i.e. staff that run everything for me. And I mean, a lot of people poo-poo staff and whatnot, but I think they're the most important assets of a business. Like, they are the most important things in any business, which your staff, and you've got to look after them. And like, when you're first starting up in business, you're literally clueless, just like with most things really. And you're the salesperson, the accountant, the sales marketing manager, the customer relationship manager, the bookkeeper. You literally have to do every job, and what you get tied in to, you get right down into the weeds, and you end up working in the business when in fact you need to be working on the business. And that's so crucial. You have to work. I mean, this can apply to everything. I mean, you have to work on your business or on whatever it is. So I'm of the opinion now that, I mean, if anyone else is listening to this and you are a business owner, you need to get out of the weeds. I mean, if you're still doing the bookkeeping or the cleaning or anything like that, you need to get out. And if you're doing anything other than looking for JVs, a business to buy, or strategic partnerships, you're in the weeds. So literally on a daily basis, all I'm doing now is just trying to find companies to buy.
So what was your first business?
Well, I had a few that flopped. So my first 2 or 3 businesses failed miserably. So do you want the first flop or the first sort of successful one, or?
I'd like to hear about both.
Well, like most traders, you get into the whole, journey of financial education. And, when I started realizing and finding out things about, fiat currencies and how the global financial system works, and, how, things like the Federal Reserve is, a private bank owned by private shareholders, and, all those sorts of sexy things, etc. I was like, wow, the average Joe has no idea about this, or, how interest rates worked, etc. So I set up a website called hownottoloseyourshirt.com. And I think I was selling, this really crappy e-learning ebook or online course, just basically how the world works. And I think I got like 10 people on board, and then, I just had to wind it down because it was just sapping up way too much time. So that didn't work. So this is all when I was like stone broke, by the way. I was like trying to just do anything to get out of my crappy admin job. I was known as toilet boy in that job because I used to work on my business, my part-time businesses during the lunch breaks when I wasn't at work. And I used to go to the toilet 10, 15 minutes at a time. And I'd just be sat in the cubicle, just not going to the toilet, but just sending out emails, invoicing and, stuff like that. So I apologized to the manager when I left.
So what was the first business that got some traction and started to take off a little bit?
I was a bullion dealer, actually. So obviously, I was a big fan of Robert Kiyosaki, and then I found Mike Maloney and all the, people like Jim Rickards, Chris Martinson, and people like that on YouTube and whatnot. And I found, I started getting into gold and silver because I really do see, especially with silver, it's the second most used commodity on the planet. All electronic needs it, and the world's running out of it. And I thought, wow, this is such a huge fundamental play, like a medium-term play. And I started trying to find out how I could buy bulk silver, to get it cheaper. And I found, I didn't know how big they were, but I managed to come across Europeans' biggest bullion dealer through a networking event. I met their MD in London, and I was just saying, I need to get into this. And he was like, well, if you find if you place orders over 100 grand, you can get some really great discounts. So I was like, okay, well, I then put a Facebook status out saying, I'm buying a load of silver. Anyone want to chip in? And my first order was about 100K, over about sort of 10, 15 people. And I then did that same status every month for the next 3 or 4 months. And I was like, wow. And so I managed to get silver for myself really cheap. And then basically a bullion business. I became a bullion dealer by default. And that was it was successful, but it was painful because the net margin was 1.4%. So in my first year, I turned over 1.4 million quid, but made under 20 grand net profit, which was just horrendous for all the hours I was putting in. And so, after about a few years, I sold that. And then, that left me with, because I had a database of, paying subscribers, so to speak. So I managed to sell it, for a nice sum. And then I used that capital to start some other businesses, really. And I put a whole whack of it in my trading account. Yeah,
right. So how have you gone from having one business to now having 15 businesses?
Well, I set up, so I sort of redid my, hownottoloseyourshirt.com sort of business, and had an education company, and that did well. So I had created sort of a following that way, and about 3 years ago. So I started some other businesses I had a consulting business I set up. I set up an aviation brokering business. That did well, and then it did horribly bad. So I had to shut that one down. But like anything, I sort of muddled my way through. But about 3 or 4 years ago, I did this mergers and acquisitions course in Mallorca. And there's this guy who, shall I say his name or not? I don't want to plug anyone, but basically he's one of the world leaders for mergers and acquisitions. And I got one of his sales emails. It was in the spam folder. The subject line caught my attention, and it was a really long form. It led me to a long form sales page, and I'm a salesperson's wet dream because I just buy everything. I'm easily sold to. And by the end of that, I read it all. I pressed buy, and it was a £7,000 course for 2 days in his home in Mallorca. And like I told my wife, and she was like, "Oh, you muppet, Siam, you've been you've been had." And I was like, "Yeah, I probably have, but I mean, if I can just get one nugget." So like with every like conference I go to or whatever, all I want is just one nugget which I can go away and do. And so I went there with completely open-minded, and to be honest, I stumbled onto some apps like a gem. Like if that course was $100,000, it would still be dirt cheap. And like it was a legitimate guy. The course was great. I mean, and I learned everything from how to buy distressed businesses, how to buy successful businesses for £1, how to basically buy and sell businesses. And like that course was the beginning where I realized that like there is no profit in running a business. Like it was quite interesting. Like the first line, but there was about 7 other people there, all business owners. And his opening line of the weekend was, "All business owners are mugs." And we were all sat there looking at each other going, "Wait a minute. Yeah, we probably are. We just paid you $7,000 and you're calling us a mug." And then he went on to explain that basically, like, there's no profit in running and growing a business. That's where all the heartache is. That's where, all the growing and teething problems are, staff problems and, getting to market, and it's costly. And like businesses, like trading, is a huge marathon. And most people like fail like in the first or second hurdle. I mean, in business, 9 out of 10 businesses fail in year 1, and those that succeed year 1, another 90% fail within year 5. And so it's like, hardly anything emerges from 5 years. And so basically the idea is that I don't like buying businesses that are up for sale, because there may be skeletons or they may be selling for good reason. So I like buying businesses that are not looking to be sold. So I like nice profitable businesses. And it's like chasing the girl at school. You always wanted the girl that you couldn't get. And it's the same with these businesses. And so I've got a criteria. So I only buy businesses that have been running for at least 3 years, have at least $300,000 net profit per year, and have like a management team in place. So proper, staff. So that way, when I acquire it, I can put like my own MD in, or I can promote the person, like the ops manager in, to run the company. And then I can sit back and just get the dividends. And there are certain ways you can get the company for cheap, or do like a thing called a bimbo, which is a buy-in management buyout, where you effectively use the company's profits to buy the company for you. So yeah, that's basically it. So really, I own about 15 companies, but I only really actively manage or really run sort of 3 or 5, and they're the ones that I set up just because they're my sort of babies.
Okay, so you might have already answered this to some degree, but why not just have one business and grow it as large as you can over having many smaller businesses?
Yeah, it's a really good point. And like some of my business mentors in the past said I'm a bit of an idiot for basically spreading my attention and time and energy, everywhere basically. And it is a really good point. I could just focus on one thing, but I'm also trying to mitigate everything. So I do not like risk. So as you can probably tell with trading, I'm going in at 0.25% per max risk per trade. So if you just have one business, you are susceptible to that industry. If someone disrupts that industry, you're screwed. If that one company is, based in the UK and we have something like Brexit or whatever, you can be screwed. So I have a very negative outlook on the world. And I had this, so years ago, I said to myself, for the rest of my life, politicians will always be crooks, bankers will always be bastards, prices will always be too high, taxes will always be too high, the government is not there to help you, and all the government cares about is being re-elected every 3-5 years or whatever. And so when you have that outlook on the world, you just think, right, okay, well, no one out there is there to help me. So I refuse to be the victim. So what I've done is I'm trying to just design my lifestyle. So I'm trying to design it so, one, I don't need to go on holiday to escape from my life. I try and make my life every day, a holiday, so I don't need a holiday. And also in terms of financially, I want to be completely hedged. So, I've got, gold and silver, I am hedged. And in terms of businesses, I mean, the businesses range from engineering, IT, recruitment, marketing, education, training, manufacturing. So like if the shit hits the fan and, Donald Trump, Brexit combined with China going bust or whatever, yeah, maybe a couple of the businesses will go bust, but will it hurt me? No, not really. I mean, even if I lost all my businesses right now, I would still be financially independent. And so, yeah, I'm probably missing a trick by not putting all my focus on one thing. But I mean, I'm just doing this M&A thing right now, and I'm getting into IPOs quite a lot now. So there's some huge, like buying stocks and shares is so 1990s. It really is. It's like you got capital gains tax. You got stamp duty, you got commissions, and as you know, most people, most retail people are dabblers. People are, most people that trade or are on the market are dabblers. And I mean, the high frequency traders have got the markets licked. They really have. The stocks, that market is licked, and they're now seeping into the high. So the HFT firms are now seeping into the currency markets. I mean, as you know, it's the world's biggest market. So I only do pre-IPO stuff. So, for example, there was this this company which IPO'd in July. It IPO'd at €1, but I got in at 50 cents a share. And so the day it listed, I made 100% ROI, guaranteed, and it's now sat at €4. So, yeah, I only touch stocks if I can get in before the crowd, so to speak.
Right. Okay. No, that's a really good answer, and I think you did a really good job of explaining that too. Going back to a point you made earlier when we first started talking about, the business side of things, you said that you're not going to get rich from trading alone unless you have large amounts of capital. That's a fairly reasonable point to make.
Yeah.
And then you further made the point of saying that that's why you go into business, is to, make larger amounts of money, which you can then put into your trading account, and they kind of tie in together. They kind of work as one in some ways.
Yeah.
How do you actually suggest someone goes about doing things that way? Because we've got to think that if someone doesn't have a business already, they probably are employed. If they're just starting out in trading, it's likely something they do after hours.
Yep.
They've now got to try and fit in starting a business and getting that off the ground. How doable is that?
I always put my money where my mouth is, and I think it's really doable. But the thing is, when people think of business, they think, oh shit, I need to create the next Uber, or I need to create the next Amazon or Google or whatever. And no one ever got rich, really. I mean, unless you're Mark Zuckerberg, you don't have the one-hit wonders are like unicorns. They really are. Wealth is not made in one magic bullet. It's through it's the compounding of lots of toil, heartache, and effort. And you shouldn't. Your very first business, you must not think it's going to make you millions. I have this game which I play with myself, and I call it the 5 to 9 game. And years ago, this was literally 5 years ago, I was half drunk when I came up with this with my friends. And I said, right, I'm going to sell a business for 5 figures, then 6 figures, then 7, then 8, then 9 figures. And so that's what I'm doing. I'm the first business, yeah. So I've sold a business. I'm on, I've just done a 7-figure exit, or I'm literally in the paperwork right now. So my next number is I want to sell a business for 8 figures. And the thing is, every time you do that, you learn your skill set in business gets massively improves, and you start playing at bigger levels, so to speak. But going back to what you said, which I think is a really good question, the average person is in employment or whatnot, and I think, first of all, there's 2 things here. First of all, you need to change your view on trading. You must not think that trading is going to get you out of your financial hole if you are in one. Because what you need to do is you need to work on your skills. Don't worry about the money. Just you need to make it so that 100% in your gut that you can trade an account consistently and profitably and make even if you're consistently making it, 10% per year, you're already in the top 1% of global traders. And if you, and what I say is that if you can create a track record of at least 2 years of solid stats that prove that you have minimal drawdown, that you're consistently making 10% per year, etc., you can then go and around and flaunting that, that track record. Hell, get it audited by an accountant, so it's proper legit, or do it, trade through, MyFX or whatever, any online sort of logging software, so it's all legit. And then there are people out there that will be willing, like prop firms or banks or whatever, raising capital will be a lot easier. Now, obviously, you got to be careful of, regulations. You can't be, doing money management without the proper sort of stuff. But you just need to get to the point where you can trade an account and grow it by 10, 20% per year. Because when you can, then it's all about scale. It really is. So that's the first thing. So over time, over 3-5 years or so, just work on being a good trader, even if you have a tiny account. And definitely use a live account, not dummy. You need to do all of this on a live account. So that's the first thing with a trading mindset shift. The second thing is, let's say you're making 10% per year consistently. Well, you then need to know what you want to live off. So let's say you want to make, 200 grand a year. Yeah, most people could happily, retire on 200 grand a year. So, or at 10% per year, you need what? 2 million quid, right? So you then need to start thinking, how can I make £2 million in a lump sum sale? So obviously, because I'm going down the business route, it could be property, it could be all sorts of other things, but I go down the business route. Well, I need 2 million quid. So I've just got my calculator out here on my phone. So I'm typing in, 2 million quid. Now, I would I would basically look for a subscription-based type business. And the reason being is that if you have an automated business, online business, which has subscribers paying you money, you have a really good exit multiple. So what I mean is that you can sell your business for 10, 15, maybe 20 times EBITDA or profit. So what that means is, let's take 15 times profit. So if you want to sell something for 2 million quid, in fact, let's call it 2.5 million quid, because after taxes, etc., you're going to be screwed over. So let's say you need a 2.5 million quid exit. Well, let's divide that by 15. So that means, let's assume that you can sell this business for 15 times earnings. Well, that means you need a business that chucks out 166,600. So let's call it 170 grand a year. So you need a business, automated subscription type business that chucks out 170 grand a year. Now, so you've got to work backwards, as you can see. So now we got this figure. I need a 170k business. So what I would suggest is that you find a product which has mass market potential at a very low price point. So, for example, you could sell something at, £21 per quarter, or $21 per quarter. I'm going to stick with pounds because I'm British, but so £21 per quarter. So that's what, £7 per month. What's that, like 30 pence per day for the actual user. So you then need to work out the lifetime, the yearly value for that customer. So if they're paying you 21 quid a quarter, that's making you £84 per year in terms of revenue. So if you do 170k divided by 84 quid, that means you need 2,023 people paying you 21 quid a quarter. Now, obviously that's revenue. So let's call it 2,500 people. I'm always, round up. Hell, let's be even more conservative. Let's say 3,000 people. So you need 3,000 people paying you £21 a quarter or £7 a month. And then you can sell that business for 2 million quid. You can then dump that 2 million quid in your trading account and then live in Costa Rica forever or wherever you want to go. And like most people work a job for, 20, 40 odd years. Well, hell, do you think if you had a business with a product or a service where Do you think over the space of 10 years or even 5 years, you can find 3,000 people to pay you £7 a month? I'm pretty sure you can. And the beautiful thing is, with a product that's, 21 quid a quarter, it doesn't have to be all bells, singing, dancing, whistles and gadgets. I mean, I'm not saying, deliver shit. You must never deliver shit. I mean, money is a byproduct of value. Please, you must remember that. But the thing is, once you have that database, let's say you have 3,000 people paying you, £7 a month or whatever, and you've created your own printing press because you have 3,000 people that effectively trust your product or service. So all you need to do is come up with a new product and go, hey, here's a new product. And guess what? It's, the same price. Or hell, you then just basically created another £2 million business. So a prime example of this is, dollarshaveclub.com. Yeah. Well, I mean, they started off with, really cheap razor blades. And they've now sold for billions, by the way, but they had that. And then once they had that following, they then created a new product line called, I think, One Wipe Charlie's, which is like a toilet paper type thing. And then nearly all of their customers became customers of that new toilet paper. So he then doubled his business overnight. Does that all make sense? I've sort of gone on a massive, rant there, but always work backwards.
Yeah. No, I really appreciate you breaking it down. I think that's really insightful and super interesting. One thing we should probably factor into those equations is churn as well, because
Oh yeah, definitely. Always round up. I mean, realistically, you probably need 5,000 people paying you £21 a quarter. But and also, it depends where you exit, because if you get a private sale, most private sales will be done, they'll be like, yeah, we'll give you 3 times earnings, or in this case, 15 times earnings, etc. Well, if you sell to a PLC, so another stock market, publicly listed company, a lot of the time they'll try and acquire a company because you're, one, probably taking their market share, 2, they see you as a future competitor, and 3, they'll try and get you to bump up their revenue. So I've got a friend who sold his oil company, and he went into the meeting, the final meeting. He was like, right, I'm not going to accept any less than 5 times EBITDA, so profit. And he was saying that at this meeting, there's just him on his own, and on the other side of the table, there's 9 people. So there's the main guy and like 8 solicitors or accountants or whatever. And they're like, I won't say his name, Mr. Blah, we're prepared to offer you, we're going to have to be quite reasonable. We're only prepared to offer you 21 times revenue. And he was like, right, keep cool. And like under the table, he was like, yeah. And yeah, so they're trying to buy 21 times turnover, and all he wanted was like 5 times profit, and so he walked out. He sold it for 25 million quid.
So why are people willing to pay 15 times for subscription model based businesses?
Yeah, again, another good question. Just so put yourself in the investor boot. So what was it? 170k revenue. So let's say it's making, I don't know, call it 120k net profit. Yeah. Going back to that business example with the 3,000. So if a business is making 120k net profit a year, let's say I'm an investor and I'm going to buy your business that's making 120k net profit, net after tax, and I give you 2 million quid for that. Or just work out the yield. So 120,000 divided by 2 million equals 6%. So just by buying that business from you at 15 times profit, that business is going to make me 6% divvies per yield, and 6% on 2 million quid. It's not hard. I mean, it's good, and that's sorry, I'm stuttering now, and that's assuming sales remain flat. So let's say I'm buying that off you. I'm not thinking, right, I'm going to buy this off you and I'm going to keep the subscribers at 3,000, people. I'll be sat there going, right, I'm going to buy this, make you happy, and give you 2 million quid. That's 15 times earnings. That's instantly made me, a 6% yield, and I'm going to, double the amount of subscribers. So all of a sudden, that asset which I've now bought from you is now making me 12% per year. Does that make sense?
Absolutely. Yeah.
Yeah, just always put yourself into the boots of the investor.
Right. Yeah, I'd never really thought about it like that.
Yeah, and also automated subscription is the way forward because I mean, you don't need a big business with lots of staff. So like if your whole business is automated, and everyone's on a direct debit, I mean, that's music for an investor's ears.
All right, so just moving on from this, the last thing I want to pick your brain about is the schooling system. I know you're very passionate about this. Talk to us about your views on the schooling system.
So I'm going to have to condense this because I can talk forever on this, but I did a TEDx talk on this topic earlier this year, and I basically believe that schools are killing our kids, like mentally. I really do, because our schooling system was derived from the Industrial Revolution, where it's designed to send as many kids as possible into the factories, because we were going through that huge industrial revolution. And the thing is, nothing's changed in the last 150 to 200 years. And what it's doing is it's setting, like at the moment, all schools are pretty much promoting the 40-40-40 plan. Work 40 hours a week for 40 years and then end up retiring on a pension 40% what you struggled to live on in the first place, which is the worst plan ever. I mean, why work for 40 years when you can realistically bust a gut and retire in 5, maybe 10 years? Those days are gone where you just work in a job forever and get a really big fat pension. And so we are right now going through a technological and entrepreneurial revolution, and robotics is going to wipe out vast amounts of jobs, waitresses, factories, you name it. The law world, I mean, paralegal jobs will go because, I mean, the computer's more accurate now. So there's so many jobs that are going to, disappear through tech. And if you have a schooling system, I mean, tech is on an exponential growth, yet our schooling system is still kitting out kids with bugger all skills. So what I'm in the process of doing, my son right now, I mean, it's now, November 2016. He's 5 months old. And I simply do not trust any school in the UK for my son to go to. Because I know they're just going to beat the creativity out of them. So I'm in the process of setting up my own super school. So financial education will be the number one topic, because as long as humans are around, there will always be money, currency markets, stock markets. So you need to understand the world financial system. So that will be a big topic. But also, I mean, my kids will, as in the kids that come to my school, will know that, they can be or do anything. They don't have to just settle into a job. And so the whole school, from 5 till 18 will gear them up into becoming a business owner, because business owners are the backbone and the bedrock of society. Really, they employ the most people, pay the most tax, percentage wise anyway. And worst case scenario, let's say you keep on screwing up, well, you can always fall back and get a job. So money is not real. Money is just a concept. I mean, we're the only animal on this planet which has, money. And it's no different from, monopoly money or, a glass of water. It's just people's perceptions and beliefs around it. And it's just, I think it's not a real thing. So what you need to do, I mean, if you are in the position where you are wealthy and you are rich, I feel it's your moral obligation to the world to convert that paper, which is all it is, paper or ones and zeros in a computer, convert it into something real. I help with the environment, or create charities, you do whatever, at the very least, try and become carbon negative. So yeah, that's my thing. I mean, what I really want to do is change every school in the UK. And it's going to take me 50 plus years. But I mean, if I can create just one school, I'm happy, because my son and my children will go to that school, and I know that they'll do far better than the average person leaving the average school. So maybe being a bit big-headed here, but it's my plan anyway. No,
I mean, I'm totally in agreement with you. Like, I think the schooling system is broken for sure. I mean, there's no doubt about it, You can't say otherwise. So you mentioned that there would be a lot more subjects around finance and the financial world, which obviously I see value in that. What other subjects would you want to teach more of and perhaps less of?
So, I mean, less of the things which are completely useless and irrelevant for, everyday in life. Like, I mean, the parents for these kids that come to my school, I mean, if their parents want their kids to be a doctor or an engineer or a mathematician or a scientist, this really isn't the school for them, because for that you do need good grades, etc. And I don't think I will have a proper grading system. So I think, I mean, financial education, we're going to have like our own currency system within the school. So it'll be a fiat currency. So, I mean, if the kids can become a millionaire or a billionaire within our schooling system, when they leave into the real world, they're like, well, I did it, with school money. I can do it with, sterling or dollar or SDR or whatever it may be back then. But coding, I think, is going to be a huge thing. So at the same time, I'm going to self-fund this, but I want one of the UK's best centres for 3D printing, robotics, virtual reality and augmented reality. And what I want is for these kids to play around, create stuff, break stuff from the age of 5. And what I'll do is that, like, if a kid is playing around with all of this kit, 3D printing, robotics and, augmented reality, by the time they're 18, they're going to be really clued up. They're going to be creating all sorts of stuff we can't even imagine right now. And what we'll probably do is, the school will keep 50% of whatever business they create, and they keep half. And I don't know, I genuinely believe this school will create the next, Elon Musk or, Zuckerberg or whatnot. But at the same time, just real stuff, things that you need in everyday life. Like, I've never in my life needed Pythagoras or trigonometry or algebra.
Yeah, going back to what we're talking about here, what sort of challenges are you going to come up against in doing this? Like, I don't imagine that starting a school of your own is any easy task. What are the sort of challenges? Like, I'm sure there's some sort of regulations by the government and that sort of thing. Like, how do you plan on tackling that?
So, there's going to be quite a few regulations or challenges. So, luckily in the UK, there's a thing called a free school. So you can create a school with, and do effectively whatever you want, so to speak, or within reason. I mean, look at school holidays. The only reason we have 6-week or 8-week holidays in summer is because of harvest. Not many people know that. Like, the only reason we have these huge summer holidays is because the farmers back in the day needed, their kids, to help out with the harvest. It's silly. I mean, I found a school the other day that did 6 weeks on, 2 weeks off, all year round. And that, I mean, that seemed like a far better solution. But so regulations, there will be one. Funding is going to be another one. So I've worked out I need at least 10 million quid to do all of this thing, or everything that I need. I want to buy, at least 100 acres of land so I can build stuff on it, and get the kids to build stuff on it, etc. And the thing is, if I get government funding or external funding, all of a sudden I am like a puppet of, the fund managers or whatever. So I want to completely put every penny I have into this. So hell, it may be like a dictatorship, but the thing is, I don't have all of the answers. I'm a simple bloke with average qualities, from Norwich in the UK. I'm a very average, and I don't know. I mean, when I did this TED talk, it was full of educators in the room, and it was so Marmite. Literally, half of the teachers in the room hated my guts, and half the teachers in the room loved it. Another thing is that I'll put the minimum wage for all teachers at least 60 grand a year, minimum, because I don't want a teacher that has debt problems and money worries looking after my children. I want them to be 100% focused on my kids, not their mortgages or whatever. So teachers do need to be paid more, because they're like, your kids are the most important thing in your life. But the thing is, what I'm going to do when I fully press the go button, I'm going to pay the best minds in the world. I'll find the best, forward thinkers. I'll get the best business people I can find. I'll get, some of the best teachers and whatnot. Sir Ken Robinson is high on my list. If you haven't heard of him, read his books or just YouTube Sir Ken Robinson. He is amazing. And I want to get like 20 odd people, the best people in the world, into a hotel room and go, right, I'm going to pay for all of the expenses and go, right, for the next 2 weeks, you are not to leave here until you come up with the new blueprint for the best schooling system that will gear people, kids up for the next 100, 200 years, and no doubt it's going to be tech, led and whatnot. And so I don't know what that blueprint is, but after this big conference, I'm pretty sure we'll have a really good idea of what, a few possible blueprints could look like. And once I've got that blueprint, I can then implement it. I mean, I just use my business skills and whatnot. I'll just treat this like a new startup business. Yeah. So the first step is literally getting the best minds in the room, and forcing them to come up with, ignoring all procedures and the norms and whatnot. Just go, right, if there are no laws, money's not a problem, blah, 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 blah. What would be the best system? And once I've got that blueprint, I can then do stuff with that.
Sounds like a solid plan, man. That's big. That's big.
Fingers crossed. I mean, it's probably, I've got a hard deadline. I've got to get this school set up over the next 4 years or 3 years before my son is, schooling age. But I mean, to affect other schools, it's gonna be probably a lifelong mission for me personally.
Sure.
So.
Yeah. I mean, what you're doing here is pretty major. A lot of people, like, you say these things, and I can just tell that you have a lot of confidence in what you're saying, and you genuinely believe it. A lot of people don't have the ability to think that big. Is this always something that's come natural to you?
No, not at all. I've had to I have to beat myself into this. So one, yes, I will fail massively along the way. I just know that. But the thing is, you're only a quitter when you give up when you fail. So I think I'm just stubborn. When the worst thing someone can say to me is, you can't do that, or it can't be done. Because I'm always like, well, why not? Why the hell not? Normally why the F not? And the thing is, you just got to, in the Air Force, we have a thing called do, review, apply. And literally, that's all I'm doing in life. I'm just doing, I'm reviewing, and then I'm applying, the things that I fall up on. And the thing is, a lot of people, when you're setting goals, goal setting, motivation is temporary. I mean, we've all set, New Year's resolution to lose weight on the 1st of January, but by the 15th of January, we're on our 3rd Big Mac. And so the thing is, you need to focus on your habits, not the actual goal. So if you want to, let's say, lose weight, don't focus on, losing weight or whatever. You need to focus on the habits that will make you lose weight. So a habit may be, right, I will go for a 20-minute jog every single day. And you need to force yourself to get into the habit of doing that jog every day. And then you simply, successful people are simply the accumulation of good habits. I mean, I'm no different than anyone else, except I think I've just got better habits than people because I'm just stubborn. And also, when it comes to thinking, I mean, if you haven't read the book Think and Grow Rich, you really do need to do that, and read everything by Napoleon Hill. I was going to say Napoleon Dynamite there. Napoleon Hill. So, and thinking big and thinking small takes roughly the same amount of time, roughly the same amount of energy, but it's so convoluted in the thinking small world. Everyone thinks small, and so it's so convoluted. So just think big, and there's way less competition. And then you also need to change the types of questions, and also the quality of questions you ask yourself. So you need to condition your brain every single freaking day to say, what must I do to get this? What needs to happen to get this? Or what needs to happen so I can buy that Lamborghini or whatever? And nothing's going to change straight away, but eventually your brain's going to go, oh, okay, well, you'll wake up and think and realize we're swimming in an ocean of opportunity. I can't go anywhere without thinking, shit, that's going to be a really good business opportunity. And then I have to go, oh, no, too many spinning plates, calm down. And so that's the types of questions. And also you can use that with tragedies. You can go, right, or if something really bad happens, you go, okay, what needs to happen so this shit never touches me again, ever? And that way you can mitigate risk. And so that's the types of questions. Then you need to think the quality of questions. So you need to think, well, okay, instead of thinking what needs to happen for me to buy this widget, you need to say, well, just think bigger. So go, okay, what needs to happen so I own this shop, so I can have every widget? Or what needs to happen for me to buy this house? Or no, what needs to happen so I can buy the village? Just think bigger. And eventually, like over, a few months of ramming this stuff into your head, I mean, this whole Tony Robbins type stuff, your brain will just change. So, yeah, some person after the TED Talk said, you can't do this, it just can't be done. And like my brain just sort of exploded inside. I was like, why not? Why not? Why not? And they just couldn't give me an answer every time I said, why not? And I was like, it's just not done that way. Well, why not? And like, I've got a filter, sorry if I'm rambling, but I've got a filter in my head. So whenever I have a decision to make, and I'm not sure, I run it by this filter, and it's basically, am I going to die or is someone else going to die? No. Okay. Am I going to get hurt or is someone else going to get hurt? No. Am I going to jail or is someone else going to jail, or am I breaking the law? No. Well, they're the three worst things that can ever happen. So if it doesn't meet those three criteria, well, then just freaking do it. So what if you fail? So yeah, that is literally the worst case scenario.
Yeah. Man, what a brilliant answer. I'm loving this. There's one more thing I want to ask you, and then we should probably wrap this up. Now, when we started talking about the schooling aspect, you were saying that as we keep moving in the future, there's going to be a point where more and more jobs are being taken over by technology and robots. How are humans going to stay relevant? Because like not everyone wants to be behind this technology and behind these robots creating things. Like some people are happy just working in the factories like we talked about earlier. Where are humans going to go? Like, what's going to happen when robots become more prevalent?
Yeah, so it's a really good question. And the thing is, people have been saying the same question for centuries now. So if you go back just 100 years, depending on what country, like if you take the UK, 90% of people worked on the land. That's nuts, isn't it? Like 90% of the people were farmers of some sort. And then obviously we got tech like tractors and, better tech. And now we have less than like 5% of the population are farmers. Where the hell have all those people gone? And at the end of the day, humans are resilient creatures, and we always adapt. And basically, we always upskill. So the farmers had to upskill and do something else. And it's exactly the same this way. However, I do think this is a huge topic which we do need to look at, because the rate of change this time round is going to be far quicker than anything humans have ever seen in history. Like if you look at the transitions of the energy transitions, it's long. So for thousands of years, we went from, we used wood as energy, and then we went to coal. And the transition from wood to coal was like 200 odd years. And then we went from coal to oil, and that transition was like 100, 150 years, depending where you are on the planet. And like, we're still using oil. Now, obviously we don't have a new form of energy. Ultimately, I think solar is the way forward. But like the rate of change is increasing massively because tech is on an exponential growth. And for those, I don't want to teach people get people to suck eggs. I mean, if you're not really familiar with exponential growth, please study the hell out of it. It's scary, especially when you're looking at global debt and global currency expansion. But and yeah, so the next transition, robots are going to absolutely take over the world in terms of jobs before we even know it. And so that is going to be a massive shock. And so, yeah, there will be huge unemployment, in some sectors. I mean, China is leading the way. I mean, I read a fact, there's this region of factories, 160,000 people have just lost their jobs. Just because the factories have just got rid of the people and they've put robots in instead. Now, a lot of the news in China is being smothered because it's a nanny state, so to speak. But it will happen, and I think ultimately at the end of the day, we'll all have like a universal basic salary, just like like Switzerland just declined. We'll all end up being paid by the government like $1,000 or £1,000 a month just to live, and that way we can then start working on better stuff. That's what I personally think. But yeah, I think at the end of the day, those that, like the taxi driver, like if you go, this is the prime example. Taxi drivers in London, so black cab drivers are the best example. I go to London a lot, and I always get a black cab because I just love chatting to the cabbies and just getting a view of their mindset. And no offense to them, they're so stubborn and so backwards. Like, anyone can see that Uber is absolutely destroying the taxi world, especially in London. And like, all these taxi drivers are just bitching and whining about Uber, when in fact they should like be, really being concerned. I mean, hell, they should, if they're really concerned, they should, at least, go long on Uber. So whatever they lose in, fares, they can mitigate on, Uber or whatever. But they need to start reskilling now. They need to, adapt now before, automated Tesla cars take over the whole taxi world, basically. So yeah, I ultimately, I think the next 5 years, we're in for an economic shitstorm like we've never seen before. I really do believe we're going to have an economic crash at least 10 times bigger than 2008. So this equity crash will spill over and start another property crash. We're going to have a bond market collapse as well. However, and we're going to have all this, upheaval. But I think 10 years plus, the world is going to be some awesome, just freaking awesome. Honestly, there's a book created by Peter Diamandis called Abundance. The future is brighter than you think. And I encourage every single person that's listening to this to get that book. It's a thick one, but just read it. Honestly, the future is so positive. It's silly, but just over the next 5 or 10 years, you just got to weather the storm.
Great stuff, man. I'm gonna check that out. I interviewed Michael Siding. I'm sure that's how you pronounce his last name. He's a or former fund manager in Sweden, and he was on the podcast a little while back, and he spoke a lot about AI and robotics becoming more prevalent in that. It was it was very interesting. I find this whole subject fascinating anyway, but I'm sure we could go down a whole nother rabbit hole again, but let's cut it off here. So I just want to say, Siam, thank you so much for doing this, man, and I appreciate you taking the time. It's almost 2 hours now to speak with me and share, a lot of really great insight with everyone who listens to this podcast. So yeah, thank you very much.
No, thank you for your time. I'm sorry if I've rambled on for a bit. Yeah.
Not at all. That's the whole purpose of doing the podcast. We don't have any time constrictions, so it's good in that sense. Where's the best place listeners can go to find out more about you?
I don't want to plug anything, so I would just say just go, YouTube my name, Siam Kidd, on YouTube. I try and put 1 or 2 new videos up on there. And if people want to, do more digging around on me, I mean, there are links on, my videos and whatnot. But I think that's probably the best thing.
Okay. And do you want to share your Twitter handle?
Yes, Siam Kidd. So it's SIAMKIDD. And I'm loving your program. Honestly, Chat with Traders you're doing more for the trading community than any other thing I've come across. Like, the knowledge you're putting out there for free is just remarkable. So I have to thank you because I love listening to them. So.
That's huge. It's awesome to hear that coming from you. So thanks very much.
You've reached the end of this episode of Chat with Traders. But rest assured, there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes. And we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.